No, it's logical to put two and two together and understand that why the trigger has happened or why the selling has happened. You look at the pharma index and compare that with what the IT index has done. Historically, they were called as the defensive trade, which is weakness on rupee. You always go to IT and pharma. But IT has gone just one way, it's gone through the roof, and pharma has gone through the floor. Why is that happening? Number one, because of COVID last year, the US inspections were not happening. Not every company got a clean sheet, and US inspections or US FDA audits have actually started. It started with Jubilant, and we know the other pharma companies also will have to pass that litmus test. So that audit process has started. Second, most of the pharma companies for the quarter gone by, not for the right reason, for the wrong reason, which is second wave, they saw an exceptionally strong sales in their COVID portfolio. That's not going to repeat itself, and we are hoping and praying that there is no third wave here. For Cipla, I remember the COVID portfolio became something like 6 or 7% of the total sales, something which was non-existing, let's say, a year ago. Third, the domestic market has been subdued. We are staying more indoors, we are wearing more masks, which means that the number of illness and perhaps a lot of infectious diseases are not spreading because we're cautious. So the domestic market has been subdued, and on top of that you got numbers. I guess pharma, in a sense, because of the second wave and because all of us thought that the healthcare demand, the healthcare pricing, the healthcare sector will only go up and up and up, that positioning I think is getting challenged. IT, since it is showing growth, it is volume, it is new architecture which is getting created, the same money which was getting allocated, let's say, to pharma now seems to be going towards IT. And also, Nantara, these pharma stocks were not very cheap. We must realize that they cannot trade at P multiples of consumer companies because there is a lot of volatility in these companies. Sometimes because of product launches, sometimes because of pricing, sometimes because of what is there in terms of the US FDA audits. So pharma companies historically are very volatile. It's just that the P multiples had gone so high that things had to normalize. But it's not all over for pharma. It goes through its bouts for up and down. You got to be now selective and ask yourself one simple question, that what are you in for? If you are in for the vaccine play, well, it's going to be Cadila, it's going to be Dr Reddy. If you are in for a strong pipeline where a surprise could kick in, it could be Natco. If you are in for a domestic revival story, then it is Cipla. So you got to pick your spot depending on your understanding. But yes, the generic rising tide phenomenon which was there in pharma for better part of 2020 and first half of 2021, I think that is surely behind us.